Hello, thank you for joining us. It's Friday edition of Your Business Nigeria. Now, here are the highlights for today. CBN defends Naira with $3.36 billion in 2 months to gain stability as manufacturing trade deficit hits 2.6 trillion Naira in Q4 of 2021. Now, Asian shares join world rebound on easing of federal hikes fears as China tech boosts. Well, on our interview segment today, we'll have a special conversation with the MD CEO of the NSIA. We'll be assessing the impressive audited financial results for the year 2021, despite the volatile macroeconomic fundamentals. On the other side of the show, we'll shift our focus to the discussion around the status of the NNPC's tax remittance and, of course, Executive Order 7 approved by the federal government. Also on the program, our Connect Satellites, our broadband segment will be on today. Welcome to the show. Let's start with news making headlines across the world of business. The value of Nigeria's manufactured goods trade deficit for the fourth quarter of 2021 stood at 2.6 trillion naira. Well, that's according to the latest data from the National Bureau of Statistics. The NBS in its foreign trade in goods statistics report for the period under review shows that the total manufacturing import was about 3 trillion naira, while exports was 395.48 billion naira in Q4 2021. In October 2021, the country's import was 904.52 billion naira, while export was 184.5 billion naira. While in November of the same import month was 1.03 trillion naira, while export was 181.12 billion naira. At the end of Q4 2021, import was 1.06 trillion, while export was 29.81 billion naira in December. A trade deficit occurs when a country's imports exceed its exports in a particular period. Well, let's get to our first topic today. The Nigerian Sovereign Investment Authority, NSIA, manager of Nigeria's Sovereign Wealth Fund, has recorded 9th year of continuous earnings in spite of our volatility and cyclical risk across markets for the 2021 financial year. The strong financial performance underscores the resilience of NSIA's investment strategy and the quality of its earnings given the challenging macroeconomic environment. Well, a breakdown of NSIA's activities for financial performance during the period indicated a total comprehensive income of 147 billion naira in 2021, a decline of 8.2% relative to 2020 at 160.1 billion naira. Inclusive of FX gains of 45.8 billion naira in 2021 and 51.2 billion naira in 2022. While the total operating income, that's core income, exclusive of FX gains of 100.8 billion naira in 2021, down 8% compared to 109.6 billion naira in 2020. The net assets grew 19% to 919.73 billion naira in 2021, indicating a pointer to positive returns across the three funds. Let's speak about this to give you about this very impressive performance. I'm being joined live from our Abuja studios, the Managing Director, Chief Executive Officer of Nigerian Sovereign Investment Authority, Mr. Uche Oji. Thank you so much for your time, Mr. Oji. It's good to have you on Business Nigeria.
Thank you for having me. Good afternoon.
All right, good afternoon. The Nigerian Sovereign Investment Authority has announced the audited financial reports for the year 2021. In that report, total comprehensive income of 147 billion in 2021 is a decline of 8.2%. Now, what would you say are some of the contributory elements accounting for this 9-year continuous earnings in spite of volatility and other risks across markets?
Well, I've lost volume. I've lost.
Okay, can you hear me now, CEO?
I can hear you now.
All right, I'm saying that I've looked at the figures. What would you say are some of the contributory elements accounting for this 9-year continuous earnings in spite of all of the risk across markets?
Okay. Well, thank you very much. Thank you. Thank you for your question. And I will answer the question in 4 ways. I think there are about maybe 4 factors that drove the performance. The first is international markets still continued to give us some tailwinds. So the market started to decline towards the end of last year, but we were already benefiting from the tailwind of the market. So our international investments did very well. And this is specifically public equities, private equity, some of the venture capital investments that we made. Although towards the end of last year, we began to reduce the risk in the portfolio by removing some of those investments. But so that was one big factor. Secondly, of course, we also always benefit from the exchange rate movement. Although in 2021, the exchange rate was a little bit less of an impact compared to the previous year. But even then, if you took that out, we still made 100.8 billion naira in profit in 2021. So that's also a factor in terms of the returns. But the other thing that I thought was very important is that most of our investee companies in healthcare, in financial market infrastructure, in agriculture, all started to turn positive and give us some really good numbers. So healthcare, for example, had been a loss-making business because we only just got into it, but it's turned the corner at the end of 2021. We own businesses that we invest in, everything from the Nigeria Mortgage Financing Company, the Family Homes Funds, InfraCredit. Those companies all performed positively as well. So the investee companies of the NSIA, the associates, and the subsidiaries all did extremely well, and I think that was also a very important factor. The final and probably the other factor that I thought was interesting for us was as we look into some of the direct other investments that we're making in the country, we are beginning to also notice that some of the cost elements were lower, and so in some ways we're able to achieve more with a little bit less. So all in all, I think 2021 was a very decent year for us, but the key factors I mentioned were the first three in terms of what's happened with the overall markets, what's happened with our investee companies. Those are the things that I think were very, very positive for us.
A great one there. Well, let's do a further analysis on the reach of NSIA across domestic infrastructure projects, from motorways, agriculture. Tell us more about this. What's your assessment within this regard?
Sure. Now, so the NSIA, and I'm going to sit back and explain this a little bit concisely. The NSIA is actually made up of three funds, okay? So there's the Nigeria Infrastructure Fund, which makes direct investments in Nigeria, and this is the one you're speaking to in terms of its reach in agriculture, toll roads, and many other areas. There's a Stabilization Fund, which is a fund that provides stabilization support to the government in times of economic stress. And then there's a Future Generations Fund. The last two, the Stabilization and the Future Generations Fund, invest mostly internationally. Okay, and at the last count, our investments span more than 10 different countries and currencies. But the Nigeria Infrastructure Fund is the one that focuses on the domestic market. There are 7 areas of focus for the Nigeria Infrastructure Fund. The first is agriculture, the second is healthcare, the third is toll roads, the fourth is financial markets infrastructure. The fifth is what we call gas industrialization. The sixth is technology, which is a new area for us. We really started to make investments in that area, and I believe. And the last one is power, where we've also been very active in some of the power investments that we've made. So these are the 7 core areas of focus for the NSIA. Now, and I'll speak to it this way. The fact that these are the 7 core areas of focus does not mean that this is the only thing we do. There are other areas of interest which we might just invest in without necessarily having to sponsor or develop transactions there. So in these core areas of focus, I'll give an example. In agriculture, the NSIA manages the Presidential Fertilizer Initiative, which we talked about extensively yesterday during the State House briefing. And this has enabled a resuscitation of the domestic fertilizer blending industry and reduced the cost of fertilizer in some ways, but also made it more available at a fairly high quality. The NSIA also makes direct investments in agriculture, having set up its co-investment fund of about $200 million with partners from outside the country. Healthcare is an area where you've seen us being very strong. Actually, healthcare, we made 3 demonstration investments, one in Kano, one in Umuahia, and one in Lagos. Those have been enough for us to learn how to do it and do it properly. And now we are rolling out 23 centers across the country as part of a first phase of broad country presence. And this includes a center for advanced medicine, includes oncology centers, includes renal centers, cath labs, as well as diagnostic centers. So this is an area of interest for us. You're going to see us be very aggressive over the next 3 to 5 years in healthcare. Financial markets infrastructure has been very interesting. We haven't done anything really new there apart from being one of the top investors in NG Clearing, but most of the businesses there have been quite mature for us and have continued to do well. Family Homes Funds, Nigeria Mortgage Financing Company, Infracredit, and these are all very interesting businesses. I could go on and on. I mean, toll roads, right? You mentioned toll roads, so let me speak to toll roads. The NSIA manages the Presidential Infrastructure Development Fund, which is developing Lagos-Ibadan Expressway, Second Niger Bridge, and Abuja-Kano Highway. Now, why is that important? The way it works is this. The PIDF, or the Presidential Infrastructure Development Fund, has some contribution from the federal government, some contribution from the NSIA, and some contribution from the recovered assets from the Abacha loot. These are the three core funding structure of these three projects. And so we're driving those along with the Ministry of Works to develop and deliver these projects. And I'm hoping that we can start to commission them from the end of this year into the middle of next year. Of course, the one that is a little bit behind is the Abuja-Kaduna-Kano road, because we've changed the scope of the Abuja-Kaduna section of that road, actually the entire section of that road. So that will go on a little bit longer beyond next year. I'm not sure what else I'm missing. In power, we're very active. I mean, we're at the construction stage of our 10 megawatt solar plant in Kano. We are also in early stages of taking over some existing power plants that have been abandoned and resuscitating them. And this is actually a very interesting segue into speaking to what I think will be the NSIA's next key growth drivers. And this is the NSIA taking on assets that are either moribund, abandoned, or actually at certain stages that we believe we can add value, bring them back to life, create value both for the NSIA and for the government. Watch that space, because that's going to be very active. It's going to be very active in power. It's going to be active in real estate, in terms of the government abandoned real estate in some other parts of the world, and many other assets that we have at the moment within our sites as the NSIA to pursue, develop those assets, create value for the NSIA and for the government. So I think I'm trying to keep it as concise as possible in terms of the reach, but it's quite broad. Yesterday at the State House briefing, you will have seen a map that showed the footprints of the NSIA. One other aspect, and I'll probably stop here, is the indirect impact of the NSIA via the funds that we've invested in. Okay, so the Future Generations Fund has backed just about every private equity house in Nigeria and most venture capital funds in the country. Those funds then go on to make investments, and the NSIA has some direct impact in the country through the investments made by those funds that are either co-sponsored or within which NSIA is a limited partner. So that's how we work. And this is what in some ways explains the footprint and the breadth of our touch points across the country.
Great work there. Let's going back to assets transfer. Do you see this forming part of your core or the core mandate of NSIA's growth strategy in medium to long term?
Yes, it is. It is. And it's very simple. And I did say during the press briefing, which I believe your members were in. Yeah. Look, fund management, or actually assets allocation and investment, is one aspect. But actually taking on assets, real assets, and either investing in them, creating substantial value through them, is a very important part of our strategy. Actually, our act allows us to do that. And we can do this both at the federal government level, also at the state government level. And there's a precedence for this, by the way. That precedence is the Singaporean Sovereign Wealth Fund. There's a second one called Temasek, which actually takes assets of the government and drives value with those assets. I'll give you an example. And a classic example of what we've done here is what we did with the Oncology Center at the Lagos University Teaching Hospital. It wasn't working well. We met with the CMD and we said, look, how about we invest in this with you, develop it, run it at a certain point, and then transfer it back to you. But we will have all created value. And that is why, if you look at the Lute Cancer Center today, it's working well. We put in, it wasn't that much really, it was maybe like $12 million. But we hired the management team, developed that with the management of Lute, and that center today, in many ways, was a lifesaver for a lot of people during COVID who couldn't travel. We've had 150,000 treatment cycles for people who have gone through their full course of radiotherapy and chemotherapy at that center. That's a classic example of an asset that wasn't working well, that we actually co-invested, and we created a substantial amount of value. Look to do that in many, many areas. There are too many industrial assets that at the moment are abandoned across the country that I believe are areas that we could become very, very impactful.
Let's have your forecast now for the year 2022. Inflation remains the global buzzword for business community this season, unlikely to last for the month or the most part of the year. How do you see this affecting the performance of all asset classes and then the role of stronger risk management?
All right. I've lost audio again, but I will figure out the rest of the question myself.
Okay, can you hear me now, MD? I'm talking about inflation,
I can hear you now.
Inflation and its effect across the business community. How do you see it affecting your performance going forward?
Inflation is a problem. It's a problem. I don't know, maybe I didn't have the opportunity of speaking here last year when we announced our results. I did say as far back as March, April, May, that the single biggest challenge for investing over the next 12, maybe 18 or 24 months is inflation. And there are three things about it. One is inflation is a major indirect tax across all asset classes, and it could bring down the value of bonds and also bring down the value of equities, depending on how policymakers respond to it. Okay? And in this case, you have three things driving inflation. The first is we've lived through decades, but we've lived through years of, in some cases, negative interest rates, in some cases, zero interest rates in the developed world. That's not sustainable. And we've had also a lot of multiple support by the Federal Reserve System, by the ECB, by the Bank of England, all pumping money into the system. This was bound to result in inflation. The key triggers, of course, were COVID, as well as today now, of course, the Russia-Ukraine conflict. I don't think inflation can be dealt with that easily. The challenge of policymakers today is, can we tame inflation without causing a recession? And that, I think, is something that has about three or four scenarios that we have to play out. One is stagnation, the other is stagflation. Another one is what we're all hoping for could be some modest growth with inflation declining. And of course, when I look at the possibilities, I think that the options that we have are not that many. I did say during the call that this will be one of the most difficult investing environments in the last 15 years. And I mean it. And I think that you're going to see the impact in equities, particularly technology companies that have high multiples and high valuations. Those are going to go through multiple compression. You're going to see the impact in emerging market debts. So you're going to see yields rising, interest rates rising, and that, I think, is going to push the cost of raising money for emerging market countries, especially in the Eurobond market, very high. The third area is housing. We haven't seen that yet in the developed market, housing market, but you will. Because to tackle inflation, you raise interest rates, housing prices come down. So these are all factors that I think will yet play out. So I think as we go through this year, we have to, as an investment community, come to the reality of the fact that in some ways the party could be over for some people. And so for the NSIA, we saw this last year. We started to take risk off the book. 2022 will be a very tough year, but I'm very confident that we will still, in many ways, outperform all our benchmarks and our indices. So far, Q1 was tough, but I think that there is also a couple of things that could play out in favor. If the policymakers get it right, and I touch a fairly how will I say, it's a 50-50 scenario there. If they get it right, and in the second half of the year, especially towards the end of the year, China untangles its supply chain by, sorting out their COVID issues, there is a possibility of a rally in the very back half of the year. But between now and then, it's going to be painful for the investment community.
Interesting. As we prepare to wrap up this segment of the show, FG is to take delivery of fertilizers from Russia and Canada next week. You said that yesterday. Can you tell us more about that and what more we should expect moving on in the year 2022 from NSIA?
Sure. Thank you for that. I will. Okay, so you're asking about the Presidential Fertilizer Initiative.
Yes, please.
All right. The NSIA in 2017 took on a role to help the government in managing the fertilizer program. Of course, this is not a core business of the NSIA, but we also realized that every sovereign wealth fund is set up to solve the problems of those countries. And at the point, there was a challenge, and we thought we were invited to look at it. We came back with a structure, and the government allowed us to implement it. And that's been very successful. Before I speak to the factors in 2022, let me reel out some statistics for you. When this program started, there was a huge deficit and huge subsidies being paid in fertilizer. It wasn't available. The maximum amount ever produced was even up to 300,000 metric tons a year. The blending plants in the country that actually produce the right type of fertilizer you need for the right soil type were moribund. Only 4 of them were working at less than 10% capacity utilization. And we were paying for things we didn't need to pay for. 60% of the raw materials needed to make fertilizer is in Nigeria. We were importing fully blended, fully compound fertilizer. Made no sense. Okay, so we created an entity called Nike NPK that actually stood sort of in the gap between the fertilizer blenders and the big suppliers. The president went to Morocco, negotiated a deal with the Moroccans and also with the Russians to bring in the raw materials that we do not need. And then we send those raw materials to the blending companies who then blend and sell in the market. That in many ways created value domestically. We've gone from 4 blending plants to 7 in the first year. Now we're at 72 blending plants today across the country. We have seen, from statistics provided by the blenders, up to 50,000 jobs created, both direct and indirect. We have seen fertilizer types and consumption go up significantly across the country. And we have seen the program. Last year was the first time this program turned a profit. So there was no need for a subsidy or payments to people that it turned a profit, 9 billion naira profit last year. This is fertilizers we're talking about. Now, the NSI did this. It's not in our balance sheet. It's just something we did to help the government. And I think it's been very successful. We are now in the first stage of exiting that program. We have spun off that entity to the Ministry of Finance Incorporated. We continue to manage it to stabilize the industry. Now, this year, there was a challenge with Russia-Ukraine crisis. There are 3 components that we need. We need urea, which we at the moment get from Indorama and from Dangote soon. We also need potash from Russia, and we need phosphate from Morocco. Phosphate, we're getting no problem. Potash was a problem because Russia controlled the chunk of potash production. Eventually, we were able to solve this problem because that led to a significant increase in prices and hoarding and all that. We managed to solve it, and there was a big concern about 2 months ago about potash. But I'm glad to announce that we've managed to strike a deal with both the Canadians, who are the other suppliers of this, as well as, of course, some of the materials that we have with Russians, and they're all on their way. So by next week, we will have sufficient quantities of potash for our planting season. Now, let me make one point that I think it should be clear to people. We had already last year enough in the inventory to supply 40% of our needs. So there's sufficient quantities in inventory. And anybody who is hoarding, we're saying, listen, there's no point because all the raw materials will be available come next week. So we're very confident that at the minimum, we can deal with the availability of fertilizer. What I cannot sit here and guarantee you is what the pricing will look like in some ways, because across the world, this challenge with Ukraine-Russia crisis led to significant increases in the cost of raw materials.
So I said, what more should we be expecting from NSIA moving on in 2022? You say you focus more on technology and all of that. Tell us through that as we wrap up.
The technology is a new area for us. It doesn't mean that we're not going to focus on that area. So let me speak to the direct investment element of NSI in the Nigeria Infrastructure Fund.
Okay.
So the toll road projects, Second Niger Bridge and all of that. So we've given you a timeline for what we believe should be the commissioning program for some of those projects. Technology is a new area. We've made our first investment in a data center company, and we're looking to do more of those into hyperscale and also other direct investments that we're going to make in technology. And it's everything from submarine cable to data centers to terrestrial cable to even services in some ways, because I believe that technology is an opportunity for Nigeria to catch up with the rest of the world. And in some ways, we're very proud of what many of our young people are doing in tech, and we're hoping to, the NSI can play a role in supporting that. In terms of the external investments, my sense is that like I said, between now and the third quarter, things will be challenging, but I'm very optimistic that the fourth quarter could bring about a bit of reprieve. Yesterday, there was some news about the Chinese government trying to provide some stimulus for China. That will help in so many ways. But what I think the most important thing that China can do is to untangle the supply chain and the production chain in the world. That, in many ways, will bring down inflation. And once that happens, you're going to start to see a little bit of a recovery in the later half of the year. But between now and then, it's going to be a really big challenge in many ways. We're lucky in the sense that we have, at the moment, a significant quantity of cash in our asset allocation. And in some ways, that's dampening the effect of the market volatility that you're seeing. So the NSIA, we're not in a vacuum. We operate in a market environment with other people. Like I said, this is going to be one of those years where things will be challenging. But I think in the long run, the NSIA, which is a long-term investor, I'm very confident about the near-term and the long-term future of the NSIA.
We'll also keep a tab on you and monitor activities of the authority. Thank you so much, MD, CEO, Nigerian Sovereign Investment.